Welcome back to Closing Bell on the 1st of December 2020. So we're in the last month of 2020. I'm really looking forward to see the back end of it, but for the investing, we still got 1 month left to make that gains for 2020. So I've got three key news that I want to share with you. It's going to be Tesla, rotation to the FAANG stocks, and finally fund managers moving overseas to the emerging market in the Far East nation. So let's start off with more Tesla news. So more Tesla news came out yesterday that the 18th of December is the date where ETF and index fund manager needs to start balancing, because when the market opens on the 21st of December, which is the Monday, huge volume of Tesla stock be bought out, mandatory to balance the index, the ETF portfolio. So there'll be a huge rise from now till the 18th, and then a huge influx of cash volume going in to make it even higher. So a lot of fund managers are obliged to start buying. So I see a huge rise up to 21st. But that doesn't mean that it's all going to be honky-dory. VIX are low just now. Everything seems to be looking good. So potentially the bears might be lurking at the other side of the 21st, waiting for it to go all the way up, buying at the same time, and then pull the pedestal and let it fall. So be careful, be wary, and don't be surprised. What goes up must come down. And Tesla is the hottest stock. Elon Musk is the second richest man, and he will get battered every time on the news media. Same as Jeff Bezos back in 2015, 16, 17 when I was watching Amazon. Same thing, same cycle. They just want to create a bit of ruckus. The most popular guy gets beaten up. More Tesla news is Elon Musk did tweet or on YouTube say that he's looking for merger. Looking for merger with who? What? BMW or somebody smaller? We're not sure. But he was contemplating that, he would look for merger to expand his business even further. Because at the end of the day, one man and a fleet of a great team can only go so far. Maybe acquisition will help them grow arms a bit further up to grow that volume even quicker, because Elon Musk knows that he needs more than himself to grow bigger. So acquisition, rumor in the works, maybe not soon, but later in the future. And the next part about Tesla, Elon Musk has sent an email to all his troops in his department, in his office, to cut costs, to be careful on costs. So he promised to deliver a $25,000 vehicle in 2023, but cost seems to be creeping up. So he sent an email to everybody, guys, hang fire. If we spend too much, next earning comes bad, we are going to get hammered pretty bad. I think it was a sledgehammer. We're going to get a stock price to be hammered really bad. So he's warning his troops, and he is trying to strengthen up. Okay, next on the second part of my show is about the rotation into the FAANG stock. So I'm going to speak one by one quickly. So Apple is slowly creeping up, 122, very quietly, nobody noticed that. TSMC is up, Qualcomm is up. Why? These three companies are part of the Apple holistic environment, so they're all creeping up. All I can say is they're all starting to buy into Apple, waiting for the next Q4 2020 earning, which I've always mentioned, because iPhone 12 Pro Max are all sold out. The EarPods are on one of the hottest lists in the Christmas. The phone, the watch, the headphones, except the HomePods, which is crap. But everything is doing really well, so everybody's preparing for the great earnings. I was anticipating 125, 130, but who knows, it might go up higher. But let's see. I think people are starting to go back into the Apple stocks again. Google up 28% from September after the earnings. 28%. Google sitting at 1,800, really all-time high. Great. I think Google is an undervalued stock. If you do buy your textbook valuation, Google should be worth 2,000 to 2,200, 2,500. That's how much Google is worth, because they make sales revenue easily. The EPS goes beyond anybody, and the costs and expenses. But problem with Google is growth. Okay, they're not up there because of growth. I'm not asking you to jump into Google train just now, but there's no growth. But if the next quarter earnings shows this reoccurrence growth, and also if they've got new groundbreaking products, Google might be back. But let's see where they're going to be coming from. Let's see what Google does. Facebook sitting at 286, nearing the all-time high 295, potentially break the $300 barrier. So Facebook is working really hard. No, actually, every time Facebook keeps quiet, no news, their shares goes up. So Mark Zuckerberg, as long as he keeps his mouth shut and bring in new products, game-changing products, that's all you have to do to push Facebook all the way to above beyond $300 per share. Amazon up 3,200, Netflix up 500, they're doing well, they're keeping quiet, they're rotating away, money's rotating back in, and the likes of Microsoft, it's still stuck in limbo between the 210 and 220 area. But money is slowly rotating in. Why do I say that? Because I see money coming off hypergrowth stocks. Money coming off hypergrowth stocks, profits been taken before Christmas, and money is going back into the FAANG stocks. I think people are starting to see that the FAANG companies, the boring old FAANG, will be doing for the next quarter, and people are positioning themselves for 2021 onwards. A reset button and start from there and see where we go. Before I go on to my next segment, I would like you to click the like and smash that subscribe button to help me with the YouTube algorithm, and share with your friends and family. And talking about sharing with your friends and family, one of my viewer called Adrian Leong actually shared my videos with his mom, Maisie Leong. Madam Maisie Leong, how are you doing? Thank you for subscribing and following me on YouTube. I appreciate you guys sharing with your friends and family. As long as it helps you, it gives you value, that's my job done. So thank you very much, everybody. Let's go to the next segment. And finally, for the point number 3, a lot of fund managers, old school fund managers, that don't like Tesla, that thinks Apple's overpriced, that thinks Amazon's overpriced, they're looking for yield. They're looking for yield. Where are they looking for yield? They're looking in the Far East Asian region. A lot of writers have been pushing that China is the next big thing. Japan is the next big yield that we have not tapped yet because COVID has come down. Taiwan, Korea, Southeast Asia, Singapore might be the next big because they've controlled COVID. So much yield, so much undervalued compared to the likes of the US market. So fund managers are looking for yield, that Far East direction. So I think 2021 might be a cornerstone for the Southeast Asian region, and also the fact that China and a host of Far East Asian countries, including New Zealand, Japan, have signed a PAC treaty. Very, very successful trade deal. So that might be the trigger of 2021 onwards to see more growth coming from the Far East, which will be good. The way they control COVID is the way they're going to generate more revenue, more growth, more GDP for the country. Okay, this is me for closing bell today. I hope you all have a good, wonderful day tomorrow. Stay safe, drive safe, and most importantly, invest for the long term. Take care, everyone. See you tomorrow. Bye.